Sounds off on that. Let's go. Hello everyone, I thought we'd make a start on this midweek market update, so welcome along. So for those of you who haven't seen these before, I do them on a Friday, 2:30 UK time, and I thought I'd try out a couple of midweek ones during December, see how popular they are, just to catch up halfway through the week, see what's been going on. So the format is pretty much the same, so we'll go through the major markets, stock market indices, the big FX markets, gold, silver, oil, have a quick look at crypto, see where the opportunities are. And then if there's any stuff that you want looking at, you've just reminded me, I saw your comment from last week about the Dow Jones, we'll take a look at that. If there's any stuff you want looking at, if you put it in the chat, then once we look at the major markets, we'll go and look at all of that stuff as well. Right, so let's just do some housekeeping first. Let's do a risk warning. The presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Okay. Major announcements. So we've had a couple of these today anyway. Australian inflation, EU inflation came out a few hours ago, and was a bit better than expected, wasn't it? It was a bit lower than expected. If I drag the FT story over, here we go. Falls, so it fell to 10%. It's still 10% European inflation, but it's fallen for the first time in 17 months is the story. I think the market was expecting 10.4% for the inflation number for the EU, 10.6% last time round. There's a lovely chart, so you can see in the great scheme of things, it's perhaps, we don't want to be cracking open the champagne bottles just yet, but there's the dip in EU inflation, and it does, tie in something I've been saying the last few weeks on the Friday live streams as to whether we were near or getting past peak inflation. I think it looks like it's going to be some time until we get back to the central bank targets for inflation, but perhaps we are past the worst. And then in about an hour's time, I don't think I'll still be on then, but US GDP. So the US economic data comes out at 1:30, so just under an hour's time, UK time for me, 1:30. 2.6%, I think, is the number expected, the annualized number expected for US GDP. So we could get a bit of volatility off the back of that. Could make for an interesting afternoon. Let's see. Then, of course, this Friday, US non-farm payrolls. We do have, actually, before that, at 1:15 today, so in 45 minutes, I might still be on, we have the ADP employment numbers. So they can be used sometimes as something of a guide as to what to expect from Friday's payrolls. So we'll see. We'll see what happens. So plenty to watch today. And then, of course, I'll be back on Friday at 2:30 after the payrolls, and we'll take a look at the markets then. Quick word from our sponsor as usual, which is me. I've got a trading course that I run. There are 2 parts to the course. It's a one fee for the whole thing. Medium-term trading over weeks and months. There's 11 video lessons for that. Shorter-term trading over hours and days. I've uploaded that in the last 2 or 3 weeks. I've been putting that course together over the last couple of months. There are 7 video lessons on that. As part of the course, you get 4 live webinars with me. We run them every month. The next one, for those of you who are on the course, is tomorrow night. Is tomorrow Thursday? Yeah, tomorrow night at 6 o'clock. So we'll talk in a lot more depth tomorrow. You should have had an email If you haven't had an email, let me know, but hopefully you had. I won't talk much about it. A quick update on the numbers. Whilst I was putting together the short-term trading course, which I started putting together in late September and put it on my website a couple of weeks ago, I traded it with a £4,000 account, and I've regularly shown the profit. This is a snapshot of the profit. Closed positions as of yesterday. You can see it up here. Over the last 30 days, 868 closed positions, pounds of closed positions. Trading there's 4 trading setups I talk about in the course. So trading those over the last month. That is a pretty incredible return, to be honest. I mean, that's more than 20% return over the month. I absolutely would not expect that every month. We need to remember past performance is no guarantee to future performance. But again, for those who are on the course, we'll talk more about these numbers tomorrow. But you can see the chart. That's where I started trading it, underwater first of all. And the trend has been up since then. This number is, I think, a bit unrealistic in my experience. 71.5% of trades over the last month were profitable. I don't expect it to stay up there. I think we're going to have a bit more of a reversion to the mean, which is more like 58% for me historically. This number, again, is being distorted by the 71% number. So the wins and losses are pretty equal. Not something I want in my own trading. Normally, about 1.2, 1.3, the winners are bigger than the losers, which would bring this number down. But, overall, I mean, it's an incredible performance. And, I often, I'm very open about the realities of trading. I think most people shouldn't trade. We know that most people lose. Most people, I think, come into trading with completely the wrong mindset. That's something I look to address on the course as well. But there's an update on the numbers over the last 30 days. That is a cracking return, even if I do say so myself. I did it with a £4,000 account because I thought £4,000 account, people could relate to that. But you could do it with, 400 grand or £1,000, whatever. The approach is still the same. But there's a quick update on what the numbers look like. There you go. Okay, so that's that. Let's get into the markets. What should we start with? Let's start with the S&P. Let's start with stock markets. Actually, I should say, to find out more about the course, I can't believe I did all that and didn't plug the course. Where to go? jonesthemarkets.com. The link is in the description. Any questions about it, send me an email, dj@davidjonestrading.com. Okay, but if you go to the website, you find out more about it. Take a look at the markets. Let's start off with the S&P. We've seen some nervous markets this week, I think because of the situation in China, because of the lockdowns around COVID in China, what that could mean economically. Perhaps some of the political unrest as well isn't really helping. So we have seen a weaker US stock markets this week. I did talk about this on Friday. Where was Friday? Friday was the little red candle here because it was a quiet day, wasn't it? Because it was the day after Thanksgiving, the Thanksgiving weekend, wasn't it? And I did say I wondered if we'd see markets come under some pressure, and perhaps if we saw a weak close on Friday, it could be an interesting short opportunity. It's definitely been the case. It's definitely played out that way. So for me, looking at the big picture for stocks, it'll be interesting to see what the reaction is to this GDP figure in an hour's time. But the big trend is still down. We've looked at this trend in various points this year. Big trend since January of this year, almost right at the beginning of the year, still down. For me, 41.55-ish, big hurdle for the market. So I think it is absolutely, from a medium-term point of view, an interesting short up these levels. From a shorter-term point of view, I think there's still an argument to be a buyer of a dip, perhaps. We've got a lot of, this is the hourly chart now, we've got a lot of short-term support around 3,900 from the middle of November. So, I'm absolutely not ruling out another trip back up to 4,040. So short term, perhaps we'll get a little blip this afternoon off these numbers. Let's see what happens. But medium term for me, this could be, I am expecting this to be something of a problem area. So I think it could make for a very interesting finish to the year because the trend is still down. We haven't changed that trend yet. It was only in 13th of October. So what's that? About 6 weeks ago that we saw new lows for the year briefly for the S&P 500. So still under some pressure, but interesting. So short term still up. We can see it from here off the October lows. Medium to longer term trend still very much down on the S&P. Let's take a look at the Dow, because there's somebody who did mention it last week and has mentioned it again today. So let's take a quick look at that. It's interesting, the Dow, isn't it? I can see what you mean, because you said you'd gone short the Dow and it kept on powering higher. That is a different looking chart, isn't it? A bit like when we looked at the Russell compared to the S&P. So the Dow, I'm sure you know, is 30 stocks, isn't it? So it's not as broad a market thing. What's the word I'm looking for? Selection as the S&P, but has actually pushed through end of last week very briefly that big high. So for me, obviously, it's completely up to you what to do. For me, if I was short, there's a good lesson here though as well. If you're going to go long or short, of course, have a stop loss in place. If the market runs away from you, you should have that. For me, absolutely religiously, every time I put a trade on, there is a stop loss in place. So for me, if I was gifted a short position in the Dow at the moment, I would have my stop perhaps somewhere above that high, that 34,400 area. So for now, you could take the argument that looks like a false breakout, because it's only pushed above. It was last Friday, pushed above for one day briefly, and we've backed right off it again this week. Let's see what happens. Why haven't I got today's data on that? It is Wednesday, isn't it? Let's have a look at another provider there. Hold on a second. Let's look at those guys. There we go. Let's look at that. Oh, there we go. There's today's data. I'm a bit happy with that. So again, same story. Pushed above those highs, 34,400 or something like that. Yeah. So interesting, the Dow. So again, for me, if I wasn't, well, I'm not short the Dow. If I wanted to go short, it's definitely a really interesting short up here, because this was such a big problem area back in the summer. And the market fell. How far did it fall? Nearly 6,000 points from here. Big move, wasn't it? Nearly 6,000 points off that level. So yeah, interesting up here in the Dow. So for me, if I was in the trade, I'm sure if it blasted back out through those highs from last week, I would definitely start thinking, am I the wrong side of this market? Up to you, isn't it? Let's see what happens. But an interesting little blip up there. I suppose to give a bit of weight to the argument for going short, we do have this bearish divergence thing going on the RSI. If you've watched any of the stuff I do in the past, I'm not a massive fan of oscillators, to be honest. I just focus more on what the price is doing. But the market, the RSI blipped up here when the Dow was at 33,000. The Dow was pushed higher, quite a lot higher. But the RSI has not followed the market up. So, yeah, that does suggest that perhaps the market's running out of steam. Really interesting one to watch, that. While we're on the subject, let's take a look at the Russell. See if that's still doing its own thing. I never know if it's two S's or one. Russell 2000, there we go. Let's take a look at that. So for me, this was. I remember we looked at this a few weeks ago on the Friday, because the market, the Russell did look like it's broken out of its downtrend. And for me, I'd still be sticking with that. I'd still be arguably a buyer of dips on the Russell compared to the S&P. And then to finish off the US section, let's take a look at the NASDAQ. So there's the NASDAQ. NASDAQ, similar picture to the S&P, been going down all this year. Again, something of a problem area for the NASDAQ, around 12,000 to 12,200 for the NASDAQ. Arguably another short-term buy if we saw it hold this afternoon, depending on what it does with these numbers. We've seen this sort of zone here, 11,500, be good support for the NASDAQ. Let's see how it reacts to this GDP number that comes out in 45 minutes. But for me, not much has changed over the last few days since we looked at it on Friday. It has fallen. They've all fallen perhaps a bit more than I was expecting to fall, but they have fallen. Those big trends still very much down. Let's take a look at the DAX, particularly in light of this inflation data from the Eurozone that came out today. I still think the DAX, again, I've said this over the last couple of weeks, this looks very different to these US markets. That trend has gone in the DAX, I would suggest. We've broken out of the trend line, the downtrend that again has been in place since January this year. Broke out of that in October, taken out some big levels on the way up. So for me, I do think we are in this, since the beginning of October, we're in this whole recovery phase for the DAX now. So personally, I'd want to be a buyer on the dip. I'd rather see a big dip rather than the little dips we've been having at the moment. If I introduce my brilliant drawing skills, I'd rather see a dip, perhaps something like that, down to there, and be a buyer if it holds. With not much volatility, as you can see, over the last couple of weeks. But another really interesting one to watch, I think, the DAX, to see if we just continue to push higher. Looking at it on the hourlies, perhaps an interesting market to watch this afternoon. We've seen it sell off over the last couple of days from about 14.6 down to about 14.3. Me, if I had to do a trade on the DAX, I would be a buyer, a short-term trade, and I'd put a stop the other side of 14.3, looking to see if we can have a bump back up to at least 14.6 from here. But an interesting one to watch, I think, that one. Let's take a look at, I'll talk about some of the trades I've got on at the moment. I've got three trades on at the moment. We'll talk about those in a minute. They're not doing very much. But let's take a look at some of these other markets. I think we should look at the dollar index because clearly we've got US GDP coming out at 1:30 my time. I bought the dollar index yesterday, so I'm slightly underwater at the moment. I've talked about this market a lot over the years. It's the dollar against a basket of different currencies. Biggest monthly loss, you can just see it in the news in here, biggest monthly loss since 2010 for the US dollar. You can see the size of the decline in November. We ended, where did it end? October. Ended October at 111.5, and here we are at 106.5. So it's lost 500 points, nearly 5%. So it's about 4% in November, the dollar index. For me, this is probably the level to watch, whatever that level is, 104.70-ish, something like that, 104.50, to see if we get another bounce off it. So I bought it yesterday, like I say. I've got to stop below that low from Monday. Let's see what happens. I just thought that maybe the sell-off was overdone. Let's see. I think if we start losing this 104 thing, we're going to go back to that trend line at 102. And then that trend would still be up for the dollar, but perhaps with concerns about inflation fading a little over recent months, the Fed saying that perhaps they're not going to be as aggressive in interest rate rises, perhaps that's good. That's the thing that takes the steam out of this great run we've seen in the dollar for 18 months now. I think a more interesting market is euro dollar. I would be a buyer of euro US dollar. Again, we've had those EU inflation numbers out this morning, a bit better than expected. Downtrend in the euro since Feb of this year. It actually goes back further than that. It goes back, the most recent high in the euro was in January 2021. But you can see this pretty clear downtrend we've been in since Feb. And since the lows in September, trying to trend its way higher, breaks out the downtrend, broken some big levels on the way up. Only Monday of this week, the euro, very briefly, hit its best levels since June. So we hit, 5-month high in the euro. So for me, I would absolutely be a buyer in dips in the euro against the dollar. Again, the only question is, do you wait for a bigger dip from here, or are you a bit more aggressive? If we take a look on the hourlies, if I was a buyer today, the absolute closest I'd have my stop loss would be under 103.20. I'd probably give it a bit more room, to be honest, and go the other side of 102.90. But it's interesting, or even down here, whatever that is, 102. But, it's interesting. I think you can see that the move on Monday gave that back really quickly, but has stabilised since then. And I do think that perhaps finally we're seeing the euro turn the corner. Let's see. Let's see what happens. I think that makes for a really interesting market going into 2023. Euro US dollar. Is 2023 going to be the year of the great Euro comeback? Let's see. Pound against the dollar. Again, I think I was saying on... yeah, there is. So I just saw that question. There's some contradiction in being a buyer on the dollar index and a buyer on euro dollar. Absolutely there is a contradiction in that. For me, the dollar index trade is a short-term trade that I think I'll be out of probably by the end of this week. So that's the time scale for that dollar index trade. The euro trade, really for me, is based on the daily charts. So for me, I do think we could well see the euro move higher in the weeks to come. Let's see what happens. So yeah, very contradictory trades there, but the time frames are different on those trades. We'll talk more about that in a sec though. Pound against the dollar. Like last Friday in Friday's live stream, I did wonder on Friday, are we getting to the point where the pound again after this, really impressive run from 103 in September to 121, whatever it was last week, is again a bit overextended. So I think the pound looks vulnerable against the dollar. And if it's going to run out of steam anywhere, perhaps this is the place where it starts to run out of steam. So for me, 123 is the big line in the sand for the pound. Short term still up. So again, we have this conflicting time frame thing going on. Arguably from a short term point of view, that run from wherever we want to take it, if we take it from 103, that run is absolutely still going. So for me, from a short term point of view, I'd probably rather be a buyer rather than the seller, but I wouldn't get too excited about massive upside yet, me personally, because I think this 122, 123 could end up being a line in the sand. Let's see what happens. I saw someone asked about dollar yen. Let's have a look at dollar yen. Dollar yen, like you said in the question, pretty similar to the dollar index. I mean, the dollar against the yen has been, it's just a massive move this year, isn't it? If we look at where does it come into the year, 115, and it traded to, let's call it 150. So it's a 3,500 point move. It's a 23% move, something like that, this year in the dollar against the yen. Again, if you really wanted to buy dollar yen, for me, taking the view that perhaps it's all been the weakness has been a bit overdone, the aggressive trade would be a stop below whatever the low has been over the last couple of weeks, which is around 137.5. It's probably not a trade I would do just yet, but I think that's the level. I think if we start losing that 137.5, the risk is we go back to the August low. So I think it's all really interesting at the moment what's going on with the dollar, because it has been something of a one-way bet for the last 18 months. It's been a great market to trade, but no market carries on in one direction forever. So I think it'd be interesting to see what happens. And one quick one, let's look at Euro sterling. We don't normally look at this, but given that for me, Euro dollar looks more bullish than pound against the dollar, that should make Euro sterling an interesting market. And I think for me it does. If we look on the daily charts, not much excitement over the last month or so, but for the euro against the pound, we are seeing this 85-70 area being something of a floor. So for me, if I had to do a trade on euro sterling, I'd absolutely be a buyer of the euro against the pound, seeing if can it get a bit of a move up to 88.50. It's not the most exciting market in the world a lot of the time, euro sterling, but I think quite interesting to see what happens with that. But for me, probably the most interesting FX market to watch is euro US dollar, because of this bigger picture move that we've seen unfold over the last month or so. Let's see what happens. Okay, so we've done some currencies. Let's take a look at gold. I'm short gold at the moment. I'm the wrong side of that. I did a trade. I think I said at the end, was I short at the end of last week? I think I was short at the end of last week on gold, and I closed that for a profit, and I went short again yesterday on gold, and I've got a stop loss just above these recent highs. I think it's quite a messy one, gold. I mean, absolutely could make the argument on gold, medium to longer term, it looks like this downtrend that's been in place since the 8th of March of this year is over. So for me, I'd absolutely be a buyer of a dip on gold. I would just want to see a bigger dip again, down to perhaps below 1700 to see what happens. And it's all just been a bit sideways and uneventful. for the last couple of weeks. So for me, another, which again feeds into this whole idea that perhaps the dollar strength is over. So and it's 2023 is going to be a very different year from a dollar point of view that we saw in 2022. So I'm short gold at the moment. If you look on the hourly chart, my stop is just above this level, 1767. So I still think I think from a short-term point of view, it's still a reasonable short. We've got the highs from Monday, haven't been taken out yet. I think if we start pushing through 1764 this afternoon, it looks like a questionable short, but so far at least that level has held. Bit of a dull market, to be honest, but the bigger picture does suggest that perhaps we've seen the worst for the price of gold. Silver, I guess, is going to look pretty similar. Yeah, I haven't traded silver for a while, but again, the same sort of thing. This old downtrend thing that I had in place looks to be over. It does look like since September it's trying to build a base and build a recovery. Silver, as we know, can be a bit of a crazy market at the best of times. But for me, I'd probably still rather be a buyer of a dip on silver. I'd just rather see a dip down to $20. Maybe tomorrow or Friday's payrolls puts a bit of more spice back into these markets and we do see a bit more volatility. Let's see what happens. Let's take a look at oil. I did a really good trade on oil this week. I talked about it on Friday, but I didn't do it on Friday. Let's talk about it in a minute. But I think what's been interesting for oil this week, if we just wind this, let's just go back to where we were end of last week, right? If I was looking at oil last week, we had this low in oil in September at $76. And, given the moves we've had since that low, I just started wondering, is that correction that's been in place for oil since whenever it was, June, over? So for me, quite happy to be a buyer of a dip on oil. 76 was an obvious place to look for some strength to come in. And then I didn't actually do the trade on Friday, but I thought what happened on Monday was really interesting. This is Monday's candle here, this green one down here. It spiked through very briefly. So on Monday, we saw oil hit its worst levels since, was it new lows for the year? It may even have been new lows for the year on Monday for the price of oil. Hang on, what was the low? The low in January, 74.03. The low on Monday, 73.62. So it did, by 40 cents, oil moved to a new low for the year on Monday. It was this move here. But it happened at 1 o'clock in the morning. And I think it was all very much driven off the back of the China stuff going on in China. So sometimes those, particularly at the beginning of the week in Asian trading, after something big-ish has happened over the weekend, you could sometimes get some weird moves, lack of liquidity, all of that. So I actually bought it. I bought it Monday, about 9 o'clock on Monday, with a stop loss. Give it a bit of room. The market's bounced back. I've come out of the trade yesterday. But I do wonder, again, have we seen an important short-term base for oil this week? So for me, I'd still be a buyer of a dip, probably get some volatility on Friday. I think if we take that Monday low out though, that Monday, let's call it $73.50, the low from Monday, I think we could see much deeper sell-off for oil. But for now, for me, I'm taking the view, mid-70s looks like a good bit of value for the price of oil, and maybe we get a medium-term bump up to 92. It'd be interesting to see what happens when this GDP number comes out in half an hour. What's the US economy look like? How does the oil market react? So that will be quite interesting to see. Could see some volatility for oil off the back of that. So I don't think oil is going to be troubling $120 a barrel anytime soon. But I do wonder, have we got the mid-70s? Is that quite an important floor for oil? Let's see. We'll come back to it obviously on Friday when we look at it in Friday's live stream and see what it looks like then and see. But I think that's an interesting market to watch. Natural gas. I think I said in the live stream last week I missed the trade in natural gas. But for me, nothing's changed in natural gas over the last week. I mean, it's still a nuts market. 24th October low, 497, and then a month later it's up at 762. It's a 50% move in about a month. pretty volatile market. The big trend for natural gas is absolutely still up. But for me, I'd rather be a buyer of a dip back down below 6. So, it was good trade down here. Harry Hindsight trading when it slipped down to the low 5s. Again, I don't think we're going to be seeing 10 anytime soon. Again, I think a lot of the heat and the panic has gone out of the energy markets. Clearly it's been quite a year with the Russian invasion of Ukraine. But so I wonder if we get back to more normal trading now on that one. So that's natural gas. A quick look at the crazy world of crypto. Crazy world of crypto. Someone said in the comments last week, can we stop looking at crypto because there's nothing going on? But that's exactly when the crypto market will sneak back up on us and move like 300% in a couple of months when we're looking the other way. But nothing has happened. This is Bitcoin. Just dull, really. Same old. It seems like we got a short-term floor at about 15k at the moment, but absolutely nothing to get excited about. Someone mentioned Litecoin, didn't they, in last week's live stream, and I said I thought it was a short. It's because that was the mood. Had that move on Wednesday, didn't it? I don't know. I hate crypto. I think I said it a few times. Just the volatility, I think, is a killer for a lot of people. Litecoin, I don't know. I wouldn't. Me personally, I never even look at this stuff. But Bitcoin, not too much exciting going on there in Bitcoin. So not much. So really, stuff to watch then over the next couple of days, particularly this afternoon with this thing coming out, GDP coming out. FX, I watch the euro against the dollar is an interesting market to watch. I think this afternoon. Stock markets, how do they react in the short term? If we get a good number in half an hour, do we see a bit of a blip higher? But they have been under pressure since Thursday, Friday of last week, and maybe oil. I think oil. If I had to sit here and watch anything over the next half an hour, I'd watch the oil price. Let's see how it reacts to this GDP number. It's doing well so far. It's a big move. It's up 10% from the Monday lows. Wish I was still in the trade, but I'm not. Let's see what happens. Clearly, it's factoring in perhaps some good numbers. Someone mentioned an OPEC meeting. I should pay more attention to stuff like that. I haven't. Let's see, but I think let's see how that is reacting in an hour's time. So that's what I'll be watching. So quick plug for the course. Go to jonesthemarkets.com. Find out about I think it's the best trading course out there, to be honest with you. There we go. I know I'm biased, but it's me, and I actually trade it with real money while I'm putting the course together. I haven't just read a book and knocked together a couple of PowerPoints. It's real money, the realities of trading. Any questions, drop me an email, dj@davidjonestrading.com. Let's get into the questions and see what people are looking at. We had a look at the Dow Jones, didn't we? What time is Powell speaking today? I've got no idea. I'm going to guess 6 o'clock or something like that. Perhaps. US Fed Chair Powell's speech, 18:30. There we go, 6:30 my time. So he's speaking in 5.5 hours time. So that'd be interesting. Could see some volatility off the back of that this evening. We'll see what that looks like. Oh, is it oil inventories? Oil inventories this afternoon as well, 3:30, so in 2.5 hours time. So we could see some volatility. Again, another reason for a bit of volatility in the price of oil this afternoon. Can we have a look at 3i Group? Is that III? Is it III? That's the code, isn't it? 3i Group, or is that the share? Let's have a look at it. Let's have a look on the dailies. This is a lot of stocks look like this at the moment, and you could say, well, at least it's not Facebook and it's falling off a cliff, but they're all a bit sideways, aren't they? Particularly some of the bigger blue chip UK stocks. So for me, it's a little bit stuck in the sideways range. It's had a good run from 10.75 to 13, whatever it is, 36. We've seen a 30% move on it. If I was in it for like a medium-term trade at the moment, I'd have quite a tight stop because I'd be a bit wary about maybe it running out of steam up here ahead of 14, whatever it is. So yeah, a bit great, great trend in the 2020s to 2021, end of 2021, and then all a bit sideways since then. Loads of volatility. So nothing too exciting for me. I'd be a little bit wary about it bumping back up to where it was at the beginning of the year and the sellers coming back in on that one. And Aberdeen with the shortened name, Aberdeen, ABRDN. Why is it not coming up as a share? Is it ADN still, the code? No. AB, hang on a second, bear with me. AR, is it ARBDN? I don't think either of us know how to spell this properly, do we? So it's not coming. Aberdeen physical goals. I'm getting a load of stuff, but not the stuff I want to actually look at. I'm going to give up on that. I've got a very low patience, me. Can we look at Tesco? Tesco. How have they been doing? Tesco shares. They're always an interesting stock, Tesco. Clearly, you know, for those of you, if you're outside the UK, they're a big UK retailer, big UK supermarket. They had a really good run from November 2020 into Feb. I'm just going to have to close my blind. Can't see what I'm looking at. I suppose you could make the argument that the trend is down, something like that, right? From January of this year, you could absolutely make that argument. So for me, if I had to do a trade, I'd probably go short and I'd put a stop somewhere above 240. I don't think it's the greatest trade in the world. That would be what I would do. And if it gets knocked back to the low 200s, perhaps it looks like a buy again. But so for me, nothing too exciting in that one at the moment on Tesco. And UNH, is that United Health, isn't it? United Health. Nice trend. We've clearly looked at these before because I've got the trend line on there from before. Nice trend, all a bit dull this year, but has held up well, you know, compared to what broader markets have done. A little bit stuck in the middle, a little bit boring, but the trend is nice. So for me, if it got knocked back below 500, could be an interesting buy. Nothing too exciting up here at the moment for me on that one. Do you think the upcoming OPEC meeting will help increase the oil price if they reduce output? I've got absolutely no idea. I don't know what's being talked about. I don't know. Again, you know, I think I've said in the past with news, hang on, here's the latest news. Goldman Sachs sees high probability of OPEC cut and expects oil prices to hit $110 next year. Okay, so that's what the Goldman Sachs are expecting. For me, I never, ever try and second guess this stuff, and I just trade whatever the market's doing and whatever the trend is doing. So it would be interesting. Clearly, it will cause some volatility, but for me, I'm just going to wait and see what happens. Do you trade the different S&P 500 sectors at all, especially as the market is seen to be rotating between value and growth? No, is the quick answer to that one. I don't trade stocks at all. I trade the markets we look at during these live streams. I trade the indices. I have stocks in like my pension and my ISA, like a lot of people do, but I don't trade. I don't look at the stocks. I might start looking at them maybe next year because I've got more time on my hands now. If I did look at them, I would absolutely use the same approach that I talk about on my trading course and that I use for everything else. So if I was looking at something like Facebook, let me get the Facebook shares. Why is that coming up with a whole load of other stuff? If I look at, can I get the actual Facebook? There we go, Meta, of course it is. So if I was, looking at Facebook, I'd look at it the same way I look at everything else. So for me, the trend in Facebook, if we look at this bit of the trend since May, absolutely still down. If I was looking to trade Facebook, I'd go short Facebook. So I trade it the same way as I trade anything else, but I don't look at individual stuff. Because for me, the stuff I look at, for medium-term trading, I probably look at 40 different markets. For short-term trading, maybe 15 different markets. And I do maybe one trade a day, short-term trading, so I don't look at individual stocks. Soybeans futures. Soybeans. So let's look at that, CFD. It's a bit boring, isn't it, I think? I mean, it was a really good market here. For those of you who were on my course a long time ago, it was a really good market in 2020. Great run in soybeans all the way up to April 2021. And for me, I'd still be a buyer. I'd absolutely, I think, still be a buyer. Now, I put a stop loss under 1,400 on soybeans. a lot of that excitement has definitely gone out of that market over this year. So I'd be a buyer. Nothing too exciting, but yeah, I'd be a buyer with a stop under 1400. Heating oil, somebody mentioned. Heating oil. I'm guessing that's going to move similar to what's it, oil. But then, oh God, we don't want to see that, do we? That doesn't really help. Some of these, I just want to have a look at a heating oil CFD is what I'd like to see. Let's see if you can bring it up. Oh no, I'm just getting loads of futures. Sorry, we can't have a look at that. Wheat is looking weak again. I've still got my trade on wheat, but you're right. Yeah, it's got knocked right down. I did a trade in August. Did a medium-term trade in August on wheat. Still in the trade. Moved into profit quite quickly, and it's given it all back up again. However, if I wasn't in the trade, I would be a buyer of wheat down here. So for me, there's absolutely the same reason to do the trade on wheat that the reason I did it back in August. This had been a big level, 720 for wheat. That trend, I would argue that trend is still just about up as long as it holds 720. Let's see what happens. If it goes below 720, I'll be out of the trade. Interesting market to watch. Again, a market that went nuts on the invasion of Ukraine because, of course, Russia and Ukraine, big suppliers to the world of wheat, traded up above 1300 and has not quite halved, but not far off it. So I think wheat's in it for those of you who look at the agricultural commodities. Interesting down here with this 720 level to see what happens. Platinum, is platinum trending up? Let's have a look. Let's have a look at platinum. Oh, look at that. That's an interesting market. It is absolutely. If you looked at that, platinum has been in an uptrend since September. No doubt helped by, I would suggest, a weaker US dollar and also a better global economic outlook. But we are now running up towards that downtrend that's been in place for 18 months now, more than 18 months. That's another interesting one, actually. So an interesting one to watch, platinum. So for me, what would I do? I would sell short. That's what I would do. I'd wait for this. I'd wait a couple of days and see what happens and then go short with a stop above 1080 is what I would be tempted to do on platinum. And I think if it starts breaking 1080, it looks like the good times are back again. And it's been an interesting market over the years. You get some, you just get some weird moves. Good, going back to 2008, that thing. But we had some good runs after the coronavirus sell-off. Let's see what happens. But I would be a bit wary about this bigger downtrend and perhaps some obstacles coming in, but an absolutely undeniable good trend. If we flip that over to the hourlies and go back to September, really nice trends in September. But let's see what happens. Let's come back to that on Friday. If someone could mention it on Friday and take a look at it, I'm gonna have a look. Hang on. Can I add that to my watch list? No. Okay. Let me try and figure this out while we're doing this. So it's in the list anyway. Platinum. Right, let's do that. Add that in the list and have a look on Friday. Coca-Cola. Let's look at the stock. Some of these listed. What's that? DR. There we go. That's the one. Again, it's another one, and a lot of stocks do look like this. The ones that have held up well this year, it's held up well. For me, not too much to get excited about. I'd rather be a buyer on a bigger dip in Coke. We're running into, so much of it, I think, does depend what the broader stock markets do. If we see stock markets start to turn down again, you'd think that's going to filter through to a lot of stocks. We've seen, this year 65 to 67 has been a problem for Coke. It's 62.5. as of yesterday. I'm guessing that is. So for me, I'd just be a bit wary about it running out of steam. So I'd buy a dip. I'd just like to have a half decent dip to buy. So let's see. ARE. What's ARE? Alexander Real Estate Equities. Is that the one? Or is it another one? If you put the stock in, if you could put in the name of the stock as well. Because particularly because if we look at some UK and US stocks have the same names, the same codes. Sorry, I don't know if that's the right one. If you can confirm if that is or isn't right. Australian dollar, yes, let's look at that. I remember that from last week. Aussie dollar, US dollar. Because I think I said that should be running out of steam. But again, we're seeing this dollar come back. It's interesting, isn't it? I remember I would still be looking to go short the Aussie dollar up here. I wouldn't go short today. An interesting one to come back to on Friday. Let me add this one again in for Friday because I think that's an interesting market to watch. So for me, the question on the Aussie dollar is, we've had this downtrend in place since April. And it goes back again. It goes back much further. But that's the trend we're in. So we are 7 months, 8 months into that trend. It's having a little blip through the downtrend, but nothing major. So, and you can see now over the last couple of weeks, this sort of 68 level has been a real barrier for the Aussie. It's about 70 points below at the moment. Is it just going to turn over again? So for me, I would absolutely be leaning towards it turning over. I think it's a nice, in terms of risk reward, it looks like a nice short up here. But let's come back to it on Friday and see what it looks like. If it starts breaking through 68, then it looks like the trend that's been going since the middle of October is actually a proper recovery. So perhaps an interesting trade here would be to go short. Let's say you sell 10,000 wherever it is now. Stop loss at, let's say, 68.50 and buy back 20,000 at 68.50. So you basically stop and reverse if it does break out. Really interesting one, Aussie dollar. So we'll come back to that absolutely and have a look at it on Friday's live stream. Just keeping an eye on the time because those ADP employment numbers are out soon, just to see if we get any excitement in these markets. We looked at Aussie dollar. For a smaller account, say £4,000, would a CFD account be better than spread betting due to minimum stake sizes? Good question. Absolutely critical to be able to trade at the size you want. So for me, with a £4,000 account, I'll talk about it more on the course. The maximum I would risk per trade, risk losing per trade, would be £100. But CFDs and spread betting, it depends on the broker's attitude, because some brokers, you could absolutely trade a £4,000 account. I think most brokers, to be honest, you could trade a £4,000 account, spread betting or CFDs, and still have sensible risk management. So I think just check what the broker's minimum size is. So if I wanted to trade the Dow, go short the Dow with a 500 point stop, for example, and only wanted to risk losing £100, then the broker has to let me trade 20p a point, effectively, isn't it, on a spread bet? 20p a point with a 500 point stop loss is £100 risk, isn't it? So for me, I don't think it's a CFD or spread bet thing. It's what's the broker's attitude to minimums. So some brokers, have very low trading sizes where you can risk, pennies virtually if you wanted to. Other brokers who perhaps don't want to go after that end of the market, which I can completely agree. You'd rather have, if I was a broker, I'd rather have 150 grand accounts rather than 1,000 or 10,000 £500 accounts. So it depends on the broker. I don't think it's necessarily a CFD or a spread bet things. Dollar NOK. Dollar against the, Norwegian krone, isn't it? US dollar against the Norwegian krone. That does. Did we look at that? It was the Swedish one, wasn't it? The other week. I think we looked at. Not that I'm saying they're the same because they're in that part of the world, obviously. But you could. It's a bit like the dollar. It's almost like sort of a slight proxy dollar index thing, isn't it? Where it's sort of fallen out of its uptrend, and it's whether it's going to have one last squeeze higher, isn't it? I think it's an interesting trade. The trade for me, if I was a buyer now, I would put a stop under 970 or something like that, I think, to see if 970 holds on the dollar against the Norwegian krone. Let's see what happens with that one. All right, these numbers have come out, these ADP numbers. Let me just have a quick look on Twitter and see if there's anything exciting, and then have a quick look at the market. So has the dollar done anything off the back? I mean, like I say, they can be. ADP data suggests Fed tightening having an impact on job creation. Okay, so that's suggesting the Fed's actions are having an impact on the economy. So we've seen a bit of dollar weakness, it looks like, on this ADP number. There you go. There's a little spike on the dollar index. A little bit of a spike there. Oil price, what's that done? Not a lot, to be honest. Okay, so well, let's see. We'll see what happens when the payrolls come out on Friday. Right. Could we discuss Brent? Yeah, Brent crude is going to be pretty much the same as the other one, isn't it? West Texas, just different prices. So again, Brent, I'd arguably be a buyer of Brent. You know, if you missed what I said about West Texas crude, same argument. I'd be a buyer of Brent with a stop loss underneath the recent low this week. 80.75 is the low. Let's see what happens on Brent. What was the other markets you wanted? Let's have a look. We looked at dollar yen. Let's have a look at euro yen though. Let's have a look at euro, Japanese yen. Don't forget, if you miss any of this stuff, you can, once the live stream's finished, you can always rewind it and what's it called. I would be a buyer of euro yen. If we take a look at the trend, look at that. Absolutely. So for me, I'd be a buyer of euro yen. The closest I'd have a stop would be the other side of 142. Big move today in the euro. Interesting market, that one. Let's add that as well. Let's add that to things to watch when we come to Friday. We'll add that one in. See what it looks like on Friday. Let's plonk it up there. Oh, hang on. But I do think this euro is interesting now, you know, because of everything that's going on. Interesting year next year for the euro. Why do stocks have very high spreads? It seems much better to trade stocks through an ISA or Investco. I think it depends who you're trading with. I don't find they have high spreads, to be honest with you. I don't know who you're trading with, but I don't think the spreads are that high. If you're trading during, like I say, I don't trade stocks very much. I look at them. If you're trading during normal market hours, like a US stock, like Meta or Tesla, I don't think the spread is that expensive. So, I don't know. ARE. So ARE is that Alexandria one. Let's have a look at that. Alexandria Real Estate Equities. It's interesting, the property market, isn't it? I saw something yesterday, I think it was on Reddit or something, about how transactions have dropped in the US property market. I don't know, but somebody was trying to say how bearish it's all going to be. I mean, clearly with interest rates and everything else, it is very interesting for property in places like the US and the UK that have had such booms. So you're saying you go short? I don't know, what would I do? I'd be tempted to buy a dip. I think there's probably an argument for being long. Actually, I can see what you mean. Yeah, from a downtrend point of view, yeah. So if I was going to go short now, the closest I would have my stop would probably be at 165. You could also make the argument that although actually your approach is the purer approach, because the trend is still down, you could make the argument that it did try to break lower in October and it failed and it's pushed back up. So that could be bullish, but maybe it's gone far enough. So I think, yeah, it's an interesting one. I'm a bit on the fence about it, but the trend is absolutely still down. Chevron, big oil stock again. Chevron, I'm going to guess it's a bit boring. Oh, actually, no, it's not that boring. It's broken out, isn't it? Where's this? Let's just go back. Is that may well be all-time highs for Chevron, because I've got the data here going back to 2006. So we've got 16 years worth of data. I would be a buyer. There we go. So Chevron stock traded up middle of November to nearly 190. So what would you do here? Well, you've got to take the view, is this a false breakout? And if you thought it wasn't a false breakout, then perhaps we're off to the races with Chevron. So for me, if I was a buyer today, the closest I'd have my stop, probably about 172 or something. It's interesting though. Let's come back to it and see. Let's see what it looks like. But, you know, it's clearly having a concerted effort to try and break out to fresh all-time highs, Chevron. Of course, the flip side, if you thought, actually, this is all nonsense, and it's a false break, it's a good place to go short. Go short at wherever they're trading now, 181, with a stop at 192 maybe. So it's because, of course, there's always an argument for being a buyer or a seller. There's never or seldom one-way traffic in markets. There are buyers and sellers. Me, I'd probably be leaning towards being a buyer. but an interesting one to see how that ends up being resolved. Would you short platinum or wait for a dip? What I would wait for, I don't think I'd go long today because they're still strong today, still very strong today. I'd wait for it to stop going up, basically. So I'd wait for at least a day or a couple of days for something like this to happen. But that's a really interesting one to watch, platinum. Let's see what it looks like on Friday. Williams Companies, WMB. How are we doing for time? I'll start wrapping things up in a minute. Williams Companies, WMB. It's a bit like, it's all right, isn't it? But it's a bit, we're August highs, about 36, 35, 70. Hasn't got much go in it to get back to those highs. I'd rather be a buyer in a dip. So it's a little bit middle of the rangey type stock for me. AMD, which is chips, isn't it? Is it chips or something? Advanced Micro Devices. I would probably be going short, to be honest. I think if we pick up on the trend on AMD, should we try? Do you think we can spin it out for 5 minutes until this GDP number comes out? On AMD, I would absolutely go short AMD. So for me, it's interesting. The trend has been down. The AMD stock peaked almost exactly. It's year to the day. It's a year to the day. Happy birthday to the downtrend in AMD. So a year ago, AMD traded up to 164 and a bit, and here we are at 73. So they have more than halved in a year. Trend is still down. It's tried to have a bit of a run, hasn't it? So we've had a good run from 56 to 70 odd. But for me, I would go short now or whenever the market opens in an hour's time, and I'd put a stop loss. The closest I put a stop would be the other side of 80. It's an interesting one, that though, AMD. So for me, I would absolutely be betting that this rally is no different to all the other rallies we've had over the last 12 months in AMD. So the thing has run out of steam. It's going to run out of steam. Let's see. But it's quite an interesting trade up here. We did look at the Dow. We had a look at the Dow early on. The Dow. I just saw that someone's asked for the Dow. So we did look at that. Basically, I would be looking to see if it runs out of steam up here. This is a big level for the Dow. Let's see what happens. I am going to have to wrap things up, I think. I think we'll probably have, when this GDP number comes out in 5 minutes, there'll be a lot of noise, but probably no real direction till later on in the afternoon. Let's take a look at some of these markets after this thingy number. Oh, the dollar does not like that, does it? Does not like that ADP number at all. What does the stock market think about it? Not that much. The dollar doesn't like it though. But that leaves us with an interesting setup, I think, for Friday's payrolls. So like I say, the markets for me to watch over today and the next couple of days. Oil, because we've got US GDP coming out in a few minutes. So oil's there. Oil is at a good bounce this week from 74 to 80. So I think that's a really interesting market to watch. And we've got oil inventories this afternoon. And euro dollar, a bit more of a relaxed approach to euro dollar, I think, but quite interesting. Oh, that's euro yen. Oh, what an idiot. There we go. Euro dollar, because it does look like we're finally breaking this this big downtrend. But that's it. I'll come back on Friday. So Friday, do it all again. 2:30 on Friday. So after the payrolls are out, I think perhaps we'd have a bit of a quiet day tomorrow, Thursday, because the payrolls are out on Friday. The dude, what's his name? Powell, the chair of the Fed, is speaking this evening at 6:30. So we could have a lot of volatility when the markets open today because of the GDP number in a few minutes' time. Then it goes quiet. Then we got the speech by the Fed boss at 6:30. It goes a bit nuts again. And then perhaps a quiet day on Thursday, and then the payrolls on Friday. So I'll be back at 2:30 my time, UK time, Friday afternoon. If you're watching this and you haven't subscribed, if you click on subscribe, the only thing at the moment I'm doing on the channel are these live streams. I'll do more next year, but click on subscribe and click on the notification button. You get a notification whenever I go live. To find out more about my trading course, those are the numbers so far. Cracking October, November even. Go to the website, jonesthemarkets.com. Any questions about anything, drop me an email, dj@dailyjonestrading.com. And if you're around on Friday, we'll do it all again then. For those of you on the course, the live session is tomorrow night at 6 p.m. I've emailed you the details for how to get into the webinar. But any problems with that, let me know. Okay, good luck with your trading, and hopefully see you Friday.